All right, everyone, so the stock market crash continues. This was another awful day for the markets. So what we're going to do in this video is go over what sector was really causing the stock market to fall. Then we're going to take a look at how my stocks in my portfolio were holding up against the entire stock market. And then we're going to talk about some of the potential reasons for this stock market crash continuing. So today was another big red day. Dow down 2.25%, Nasdaq down over 4%, and S&P 500 down over 2.5%. And so we're seeing this trend continue where it's the Nasdaq dragging everything else down, where all these high-flying tech stocks are getting crushed, and that is dragging the rest of the market down. We can visualize this better with the groups part of FinViz. And for the one-day performance and one-week performance, it is technology all the way at the bottom. And this contrasts very heavily with how it was just a few months ago, where if we go down to the 3-month performance, we see technology was one of the best performing sectors, and also for half a year, technology one of the best performing sectors. So we've really seen this flip where the worst performing sectors like utilities are now holding up the best when the market is getting sold off, and those high-flying names like tech that have been going up like crazy are now feeling the brunt of the stock market crash. So we can take a look at some of the specific names. All of the big tech stocks, the FANG stocks, were down a lot. You got Microsoft down over 5%, Amazon down 4%. We have Apple down 6.7%, which is just a huge drop for Apple. Apple was almost at $140 per share. Right now they're at $112. So that's like a 30% drop for Apple in just 4 days. And despite that, it's still at the same price it was at the beginning of August. So that just shows how much the prices run up, where it can drop this much and still be at the same price it was just a month ago. You can also take a look at a stock like Tesla. Tesla down 21% just today. This stock was at $500 and right now they're sitting at $330. So this stock sold off like 40% in just 4 or 5 days. And so if you watch my videos, you know I'm bearish on Tesla. I think it's very clear that Tesla's in a bubble right now, and we could be seeing that bubble start to pop. I don't know if this is the end for Tesla or not. They might continue to go up and just become an even bigger bubble, but I think if what we are seeing is the Tesla bubble popping, I don't think the share price will ever get back to where it is right now. So if I was someone that owned Tesla, I would definitely sell the stock right now, even after it's fallen 40%, and not feel bad about it at all. You know, if I was someone that bought Tesla at $200 before the split happened and was holding it now, I would absolutely 100% sell it right now and thank the stock market gods that there was someone willing to pay this outrageous price for Tesla. There's no way you can use fundamentals to justify the share price, and anyone that tries to or says that you don't need to is just kidding themselves. So I'll stay far away from Tesla. I feel bad for people that are going into this thinking they're going to buy the dip and then the dip doesn't stop and the stock falls all the way down. That's what I think is eventually going to happen. You know, I don't know if it's going to happen right this second with this fall that Tesla's had, but I think it's very clear that it will happen at some point soon. So now we're going to take a look at some of the reasons why this stock market drop over the past week may have been happening. Here's a headline: this Nasdaq whale may have helped trigger the stock market's brutal rout. And this article is talking about Softbank, a company that was loaded up on stocks and call options, and they were now just dumping them on the market starting last week. They were buying bullish call options on all of these tech stocks, and there's reports that they bought nearly $4 billion in shares in tech stocks in the spring. So while all of these tech stocks were running up, it was just SoftBank plowing a bunch of money into them. And now when they do the opposite, they start taking the money out, that's when everything's going to crash. And it's really no surprise that this is happening. We see another headline: Tesla stock drops 21% as Wall Street scrambles to assign blame. And this is something that no one on Wall Street seems to understand. When a stock is a bubble like Tesla is, it doesn't need any reason for it to fall. It's a bubble, it's going to pop eventually, regardless of there's a catalyst or not. Eventually, everyone that's holding Tesla stock is going to realize that it doesn't make sense to be holding it at this price anymore, and everyone's going to start getting out at the same time, and that's what will result in the bubble ultimately popping. Also, some more bad news for Tesla: they didn't get into the S&P 500. I didn't think this was very likely anyway, but wherever you look, all you see are Tesla fanboys screaming about Tesla being added to the S&P 500 and how that is going to make the share price go up. And I think they got passed up on by Etsy, I think. So I guess Tesla's had some competition in Etsy, which isn't very much competition. And I think Tesla missed their chance. I think this was their only chance to get into the S&P 500. Now that they were passed on, I don't think they're going to get in anymore. And the reason for that is because they just had 4 consecutive quarters of profitability. But like I've said, the only reason they had that is because of the regulatory credits they've been getting. So Tesla's basically been subsidized by the government, and those credits are slated to run out starting next quarter. So I don't think Tesla's even going to make a profit over the next few quarters. And so I think there's no way they're getting into the S&P 500 now. So despite this, I thought it was pretty unlikely that Tesla was going to get in, but the rest of the market already had Tesla getting into the S&P 500 priced in, where the shares were already priced like the stock was being added, even though it was far from a done deal. And so now there may be some people dumping the stock on that news where they bought in just because of the rumors that they were going to be added, and now it's clear that they're not going to be. Tesla also just sold $5 billion in stock, and this is stock they just sold in the open market. And so I think this was actually a pretty smart move by Tesla. I mean, I think the management themselves know that Tesla stock has no business being up at this price, and they're taking advantage of it by selling stock. The only problem is they're selling the stock to individuals who don't know any better, and they're buying up this stock even when the management knows it's at an outrageous price, and yet all these retail investors keep buying up Tesla stock at these bubble-like prices. Another headline, oil prices settle at lowest level since June. So this is a theme that I've been seeing happening where the perfect V-shaped recovery myth that everyone's been talking about is busted now. We saw oil prices recovering very nice since they went negative back in March, and that has since fallen off. And in my last video talking about the economy, we talked about the Fed publishing their beige book, talking about their last report in July was showing the economy recovering perfectly, where everything was opening back up and all sectors were recovering. But the latest report they put out just a couple of days ago showed that this wasn't the case anymore, and now many parts of the economy were struggling to continue recovering. And so I think that's another thing the market had priced in, this perfect V-shaped recovery, which obviously wasn't going to happen, and now everyone's starting to realize it as all of these factors are coming out at the same time, showing the real trouble that this economy is in right now. So now we're going to take a look at the stocks I own and see how they've been holding up during this period where the stock market has taken a beating. So first we have Cumulus Media down almost 3% today, but they have been holding up very well, where they've been pretty much flat over the last week, where the markets as a whole were down. So they are holding up very well. So Cumulus is now at over $5.30 ever since that pop after their last earning call. I'm still very bullish on this company, and I think by the end of this year, the narrative is going to be completely changed on this company between the extra revenue they're going to be bringing in from all the political ads and their continued debt pay down. I think by the end of this year, it's going to be clear what direction Cumulus is headed in. For another stock we can pull up is Altisource, and Altisource had a beautiful day today, up over 12%. So this could be investors starting to realize that the economy is in a lot more trouble than was initially thought. And so once the housing market is allowed to fail, once all of these people that aren't paying their mortgages are finally able to be foreclosed on, Altisource is the best way to take advantage of that, in my opinion. I still think there's massive upside for this stock, and so do the insiders if we take a look at it, where whenever this stock price gets in the $7, $8 range, there is heavy insider buying. So I think they know too that this won't last long. And like I've said in my other videos about Altisource, tons of upside for this company. You can also take a look at Bank OZK, which is one of my largest holdings. Stock got crushed today, down over 6%, like the rest of the financial sector, which is still struggling. Not really a surprise. So this stock for me is more of a long-term play. I'm expecting it to continue to struggle over the next few years. But the thing I like about this bank compared to any others is that the management knows what they're doing. Right now, the management has a ton of cash on their books, and they're ready to take advantage in the next banking crisis. If you go back to what happened back in 2008, 2009, when a ton of banks were defaulting, that's when Bank OZK swooped in and acquired a bunch of banks at heavily discounted prices. And that's what allowed them to have the massive run from 2010 to around 2018. And so I think if we do see that again, where a lot of other banks go under, the same thing's going to happen with OZK now. They're in a position to take advantage of other banks being in trouble, and that is what's going to allow them to have continued growth throughout the next decade. And we can take a look at another stock. This stock is Sprott, SII. This is one I haven't talked about on my channel yet, but it is a stock I've been buying lately to get exposure to gold in my portfolio. So I'll be coming out with a full video on the stock probably tomorrow or whenever the next time I upload my next video is, but I am very bullish on this company. And if you are someone like me that thinks that gold prices will continue to rise, in my opinion, this is one of the best companies to take advantage of that opportunity. So I just figured I'll tell you the name of the company I'm investing in. But like I said, I'll be coming out with a video where I go in depth on this company and how much upside I think there is. So lastly, we'll talk about Slack stock. Their shares plunged after their earnings, where their growth stays steady. So Slack has been growing revenue by around 50% for the third quarter in a row. So if you go back a couple of weeks ago to my video where I talk about why you shouldn't be buying these insanely high growth stocks, is because it's not sustainable. No company can grow revenue by 50% forever, and not even for a very long time. But the market has Slack priced like they will be growing at 50% forever, and that's a huge disconnect that obviously isn't going to happen. So right now they had good earnings, they're still growing very fast, just not at 50% anymore, and now the stock has absolutely tanked because investors are finally starting to wake up to the fact that Slack isn't going to grow at 50% anymore. And this has been happening with all of these tech stocks. Every one of them after their earnings have been crushed. after their forward guidance is we're going to still be growing, just not as fast over the past few months. Obviously, you're going to have high growth and everyone jumping onto online work, online school. But after that, the growth is going to slow down, and people just don't realize that apparently until it's too late. So if you're wondering what you should be doing if the market continues to keep selling off, I can tell you what I've been doing, and that is not buying into these overvalued names. I don't buy into any bubble stocks. I don't get FOMO, fear of missing out, and just rush into these tech stocks because they've gone up 2 times or 3 times in a few months. I stick with buying fundamentally sound companies at attractive valuations. And there are plenty of those in the market right now. If you just look, it's going to be none of the tech stocks, but you have to look in other industries to find them. And that's the strength that it protects you for right now. When tech stocks fall off a cliff, the rest of your portfolio is going to be protected. And so I don't know if this sell-off is going to continue, but like I've said in a previous video, I pulled up that chart talking about tech is holding the markets up right now. And as soon as tech starts to sell off, the whole market's going to crash. And that is what we've been seeing so far. So if tech continues to go down, it's going to drag the rest of the market down with it. And what I'm doing right now is I'm still holding a lot of cash in my portfolio. So I'm just going to look for more opportunities as prices become cheaper, as stocks become more attractively valued. That's when I'm going to jump in and be buying at rock bottom prices. So that's just what I'm doing. And that's it for this video, really. Just wanted to make an update on the markets and what's going on right now. Let me know the names of some stocks you're keeping your eyes on to buy on a dip, and I will keep you updated on this situation. So if you found something of value from this video, hit the like button, subscribe to my channel if you haven't already, and I will see you on the next video.